Welcome back. You're watching Trade of the Week. For today's segment, I'm joined by founder of Herenya Capital, Petri Redelinghuys, for a technical analysis on FirstRand, Richemont and Alibaba. Thank you so much for your time, Petri. Quite an interesting selection there. Let's actually start off with FirstRand. I mean, we know the optimism that has come with all the banks, and I'm sure that has actually benefited FirstRand, which is the JSE's most valuable bank on the JSE. Of course, we know the high interest rate environment has benefited those banks, but also we've seen the pressure that has come with that on consumers, where they have had an increased credit impairments. So just talk to us about what that chart for FirstRand looks like.
Well, firstly, thank you for having me. I think we looked at this chart a couple of weeks ago, if I'm not mistaken, right? Sort of around the 60 Rand level as a potential buy, with the target being around 67, 65. So we've actually managed to hit that target price, and it's pulled back a little bit since then over the last sort of 2 or 3 trading days. However, what I would like to do is I kind of want to continue to ride this positive momentum, if that makes sense. I think that we've had a couple of positive catalysts in the market as well. We saw some news over the weekend that Hamas is essentially looking for a ceasefire and talking about some sort of a peace deal. You know, how accurate that is and how that works out, I guess time will tell. But that could potentially be a positive catalyst for markets. Not so good for energy and oil and gold and all those things. But all the industrials, financials, those types of stuff will benefit from off the back of this. The US is closed today, keep that in mind. So it is a very quiet.
Is it Thanksgiving already?
Yeah. It's Black Friday coming up.
Oh, Black Friday, Thanksgiving. Oh, yes.
It's wild. Anyway, so that I think is going to be good for emerging markets. It's probably going to be, you know, we're heading into a very seasonally strong time in the market as well. The Santa Rally is called the Santa Rally because it happens most of the time.
Yeah. Santa Rally.
So we're really heading into that sort of seasonality strong, and we've, you know, period, if you will, and we also have a quite a strong backwind with a potential ceasefire. De-escalation of conflict in the Middle East, which is
so more risk on sentiment to maybe coming back to the fore.
Correct. Yes. At least those are my sort of observations at this stage. You know, subject to change. News happens fast. In any case, so if we look at FirstRand over here, we can see that this little range we were keeping an eye on has worked out quite nicely. It's pulled back a little bit. I think that we can. This is a slightly higher risk play, if you will, but we can put in this little trend line over here. Let me make it fancy and pink for all to see. There you go. So we can put that little trend line in there, and we've got a very nice potential trade, maybe all the way up to 72.50 or say 72 if you're a bit more conservative, just to these recent highs. To ride a little bit of this momentum that we've had.
I'm wondering when we could have a kind of peak in terms of the optimism, but also maybe pessimism, because I feel like it's always a double-edged sword.
Yeah, I think the market is like a pendulum, right? It pushes the extremes in both directions. So if you look around now, a lot of people are super bearish. Almost everyone is super bearish, right? The economic data is bad. We've got higher interest rates for longer. You know, good news for the banks, I guess. Well, it's the balancing act between the impairments and higher earnings, right? But, you know, I think the market pushes to extremes. So we have this extreme positivity versus extreme negativity. And I think that we are in a space where we are currently, at least from a sentiment perspective, very much in the doldrums. Everywhere you look, there's just bears wherever you look. And that sort of starts to ring the bell. Well, maybe we're on the wrong side and we need to be a bit more optimistic.
I mean, FirstRand has always, I guess, been celebrated in terms of their capital allocation decisions. And I'm wondering if maybe that will kind of bring optimism from the market when interest rates do get cut and banks are maybe now looking for more non-interest revenue?
Look, I'll be honest with you. I think that the likes of you know, the likes of Capitec will have the advantage there, right? Look, they're very dependent on loans as well. We know there's been a lot of drama in the past with that. But they're making massive inroads in banking the unbanked, right? So I think that they might have a I want to say, the more exciting growth in the sector.
Yes.
However, I mean, you're quite right. I think that right now the focus is on what are we earning from interest versus impairments, and how do we benefit from higher interest rates, because obviously we're lending out money at higher interest, floating, and we're paying depositors on fixed.
Yeah.
So that spread widens, and then when interest rates start to normalize, it kind of puts a bit of earnings pressure. So how do you substitute that now with the non-interest income, transaction fees, that kind of stuff?
Yeah.
I do think that the high growth banks will have the advantage there. But you're quite right, it's something to keep an eye on.
Yeah.
I don't know offhand which bank would have the advantage, to tell you the truth. My thoughts would be Capitec initially.
All right. Well, let's move on to luxury.
Right.
Something I can't afford.
Richemont product.
But I mean, a lot of analysts saying, you know what, now is the time to actually get in, because it's been under so much pressure, because the rich are clearly not immune to the macroeconomic environment, although they are more resilient than the rest of us. We've seen that across the board in the luxury space. And Richemont, a lot of analysts saying it's looking very attractive.
Now, look, the rich get richer, as they say. It's maybe not a great way to start a Monday about these types of things, right? But yeah, so we know that the luxury segment is generally less elastic to economic pressures. People who are wealthy tend to buy nice things regardless of where we are in the economic cycle, right? So yes, we have seen a number of headwinds for Richemont, which seem to be clearing. Some of them coming out of China. China seems to be doing what it can to stimulate their economy. Also, we'll talk a bit more on China later, but I think we'll talk about Alibaba for a little bit. But if you're just a good old-fashioned trend-following chartist, this is a nice entry point, right? We can see we've been having these kind of decent waves upwards, or nice little uptrend, if you will. Yeah. And every now and then we hit a spot where we have this little downtrend in place for a few months, and then it breaks, right? And this has happened a number of times. So we just have a solid uptrend here, and we had a nice little buy signal. We can, making use of different indicators. Stochastic, which is a measure of momentum, has been sort of floating around the bottom of this thing for a long time as the market's trended down. It's finally broken up and seems to be breaking out. So we might have a little bit of headwind here at the 89-day moving average, which is currently at around 250 Rand. But if we can get up and through that, there's no reason for this trend not to continue. So I think for the medium to longer term investor, even the shorter term traders want to be in trades for a week or two. This is a kind of trade that you might enter now, and you might be in it for the next year or two, right? Yeah. So I think this is a really nice entry point into a quality company.
I'm actually wondering, the selling bouts that we have seen, would you say that it's more the short-term trader, or maybe longer-term traders that are like, longer-term investors that are like, I've been in the stock for a while, and it's actually running really hot, so let me...
Look, I think there's a number of different things. Obviously, Richemont is a much bigger beast than just JSE, right? Yeah. We saw poor earnings from LVMH, for example. So I think that this selling bout that we've had essentially, I don't want to say since the beginning of the year, since the middle of the year, right? I think that was just on the back of, deteriorating global economic conditions, as well as deteriorating earnings from other luxury brands.
And sympathy from the other luxury brands.
So obviously they are not completely immune. I mean, we joke about it. Oh, rich people don't really care. Yeah. Obviously, they're not completely immune to the economic cycle, right? So there has been some pressure on the earnings and the rest. But overall, we've got a great trend in place, right? So I think we're now in a position where we can take advantage of that, where price is down. I haven't measured it, but we can quickly do that if you like. Yeah. If I can find that.
I mean, for me, it makes sense to go into Richemont. Hey, the prices of their products are not going down, but the share price is going down.
The share price is going down. I mean, it's down 36% from the highs, right? Yeah. So I think it's a great sort of entry point into something that you don't really have to overthink. You're going to probably add this as a corner piece of your portfolio for the next 2 or 3 or 5 years potentially. So I think it's a great entry point.
All right. Well, as we were talking about China, nice segue into our next stock, and that is Alibaba. There was quite a lot of good market sentiment. When was it? Beginning of the year, when they said that they would be separately listing their different businesses, about 6, if I'm correct.
Some of them have now been cancelled, I believe.
which is now including the cloud computing business, and it actually, I think $21 billion got wiped out of its market share last week.
So I want to put some stuff in perspective for you.
Okay.
Right? So this candle right on the end here, that is when the stock listed on the exchange for the first time. We are now below listing price, and revenue is 10 times more than it was.
Oh.
So I think this is somewhat undervalued. Right? So there's been a number of challenges. As you say, there's some listings that were planned and didn't happen, and lots of market cap was lost in the process. We also have a situation where the Chinese government has been doing this tech crackdown, which I'm sure has been a topic for the last 2 years, right? Where regulation is tightening and it's becoming more difficult for people to publish games, it's becoming more difficult for people to publish apps.
But not so much now.
We're now, I don't want to say it's over, it's maybe a little too cocky, but it's easing, right? So we've seen a bit of a rollback in the stringent sort of control that, maybe it's a case that they've now gotten the control that they want. Now they can lax the rules a little bit because everybody's complying, right? Either way, the regulatory crackdown seems to have mostly eased somewhat. So I think that creates an opportunity for Chinese tech to outperform US tech, right? We've seen the NASDAQ, for example, just charge forward, and good times, bad times, it's trading near the highs, right? And that's all sort of US-facing tech businesses, Apple, Tesla, all those things, where some of the mega corporations on earth are Chinese tech companies, which, I mean, we all know the Naspers story, right? So I think that there's an opportunity here for these companies that have kind of been undervalued and outshined somewhat by the West, and because of obviously the economic and sort of regulatory challenges in China as well. Those start to ease up a little bit. I think that these Chinese tech conglomerates can really run. So that includes the likes of Tencent, right? So a way to express a view in this trade would maybe not necessarily be to buy Alibaba. Not everyone has an offshore trading account. Those that do, Alibaba, BABA is a good, or Baba is the code. I think it's a good long-term entry point for the long-term investor. I mean, we're heading into December. I'm sure everybody wants to take a break. So active short-term stressful trading, maybe not the right call. But I think if you can pick up some Alibaba shares here, sort of anything under $80, I think in 5 or 10 years from now, you're going to be very, very happy. Yeah,
it seems that there are a lot of investors who are very keen on those Chinese stocks. Some saying this is an opportunity to buy the dip, and some even saying that if you're going to dump Alibaba, maybe go for Tencent.
I don't know, man. I've got a strong. I wouldn't sell Alibaba at the lows. Do you know what I mean? It is below listing price. It's a much bigger monster than now than it was back then. And to sell it now, I think would be a mistake.
I mean, that's really just something great to note. But I'm just wondering, because now we're talking about the crackdown, but there's also the US chip export curbs that they've listed, that they've cited, Alibaba has cited as to one of the reasons why they can't list this cloud computing business. I'm just wondering how far that may affect the bottom line.
Look, I think, I don't know, to be honest with you. I don't quite know how to read the chip market at this stage. Lots of analysts are trying, but there's a lot of deceit. If you look at someone like NVIDIA, for example, chip sales were growing phenomenally,
Just coming out with results tomorrow.
Exactly. So if you look at someone like NVIDIA, if you really dig through those financials, what you'll see is that a lot of the chips they sold to a non-profit. That non-profit, does a whole bunch of different things, but it is funded by donations from, you guessed it, NVIDIA. So they're selling chips to themselves using different companies so they can report to the market, hey, we've got growth in sales. But they're running, big AI projects through a non-profit that needs chips that they're funding. So it's not quite, I don't know. It's kind of, it seems like they're doing some accounting magic, and that gets the share price going and going and going and going and makes everybody a huge amount of money. But at the end of the day, is that reflective of really what the market wants, right? So as we know now, most of the chips are still manufactured kind of in Taiwan. I think that, as long as that situation in that area of the world remains politically stable, I think we should be okay for chip manufacturing. And yes, the US will take some of it to their shores, but I don't think it's going to be the world's biggest impact on China. They'll catch up.
Well, talking about propping share prices, just going back to this plan to separately spin off and list all these different businesses, is it a case of Alibaba realized how undervalued the stock and that this is basically just to unlock a massive amount of value there?
Yeah, so that is one of the things I think that board members like to do, right? Is to, obviously they have compensation deals based on share price performance as well as company performance. So if the share price is down, from $320 to $70 in a couple of years, 2-3 years, their bonuses are looking a bit thin, right? So you have the situation where that you have that value unlock to create value for shareholders by separately listing the stuff. And we can honestly look at someone like Naspers, for example, and say that is a huge success. I mean, Naspers was 3,000 Rand a share. Then it's split into Prosus and Naspers. Naspers, went back to 3,000 and Prosus went to 1,500. So it was an enormous amount of value that was created there, right? Or unlocked, if you will. So some of them really work very well, I think.
Would you say that this is also maybe a good time because analysts are always even, telling us, you need to actually go into the stocks that you think will benefit, for example, from the interest rate cuts now before they get cut?
Exactly.
Would that be the same with China right now, especially while we're seeing kind of still shakiness when it comes to growth?
It's an interesting question. I think we have a couple of things happening. I think we have a power shift happening from west to east, right? I think this is something I've said before. Call me a theorist, if you will. But I think we have that power shift happening from west to east. And I think that we probably start to see the eastern economies lead the western economies with things like monetary policy. So already we're seeing, there's a couple of interesting things. China's struggling really to get inflation going, which is why they continue to cut Reserve Bank requirements and interest rates and trying to stimulate their economy, while the West is like suffering from trying to get inflation down, right? But at some point, China begins to find some success with the stimulus that they're doing. And then you have this sort of massive outgrowth type period for Chinese and call them BRICS markets, while NATO markets or Western markets, US, Europe, are still in the doldrums. So you're quite right. You have to try to anticipate, okay, if there's a change that's going to happen within the next 6 to 12 months or potentially even 12 to 24 months, well, how do I position myself now to take advantage of that? Because markets generally are forward-looking. So this Alibaba position, for example, is one of, looking forward to, there's, a number of different things. People are going to start to exit the US markets because if their economy really is struggling as much as we think it is, tech companies can't stay as high as they are, right? So tech investors have to sort of migrate elsewhere. China is a good option. Then you have Chinese, economic stimulus that they're trying to do. That we say begins to work. So that increases demand for minerals, whatever. But also average everyday Chinese person's life improves. So they spend more on the internet, on tech, on online sales, that kind of stuff. And again, Alibaba is a beneficiary of that one of the biggest sort of online Amazon-like platforms around, right? Online shopping is massive. So I think that this is a bit of a forward-looking investment idea. So this is not necessarily a trade for the next 2 weeks, but something that you might want to buy and kind of hang on to for the next 2 years or more.
And listen, we have seen encouraging signs coming out of China's economy with third quarter growth more than expected, but also just those smaller data points, retail sales and industrial production. So as we're heading to the end of the year, we will actually see what the overall growth outlook point looks like there. Thank you so much for your time and for your insights, Petri. That was founder of Herenya Capital, Petri Redelinghuys, with this week's trade of the week.